Hey, my name's James Nicholson and welcome to my YouTube channel. We just had the Bank of England meeting and it's not good news. If you're a mortgage holder, maybe you want to get a mortgage or you just want to know what's happening with the economy, we've got a major update in this video. The Bank of England's stance has changed. They're not looking as optimistic at cutting rates. We're going to talk about why that is, what's going on in the global economy and in the UK that's going to impact future rate cuts, and much, much more. Now, if you're new around here and you haven't done already, do subscribe to the channel over there and hit the bell notification. We're at 39,000 subscribers now. We're nearly at 40. Let's get to 40,000 subscribers as quickly as we can. So do subscribe and hit that bell notification. And let's get some more views on this video. How can we do that? Smash like, tickle like, do something to that like button. That helps with the YouTube algorithm and pushes the video out. And share this video, WhatsApp it, email it, or Facebook it to someone and let them know what is going on. So Andrew Bailey had the meeting today with his counterparts at the Bank of England, and it's not looking great. The expectations were that we would get 2 to 3 rate cuts in the UK, and we've got room for one at the moment to keep us in line with the Federal Reserve. So Federal Reserve meeting yesterday, they decided to hold rates. I'm going to do another video on that so you can really understand the impact that has on the UK economy. But in a nutshell, the Bank of England and the Federal Reserve, more so the Bank of England, they like to keep their rates fairly similar because that will impact currency. And so you don't want the pound to get excessively strong and you don't want it to get excessively weak. You want to keep it as close to where it sits at the moment because that will impact imports and exports dramatically. So what's happening? Well, the Bank of England have held rates at 4.5%. So in the US, they're at 4.5 to 4.25 to 4.5. So we've got a little bit of play there. Now, they did talk about expectations and where we might get to by the end of the year. And that was still that we might get end of year some drop still. And the expectation is that we could get to 3.75% by the end of the year still. However, the terms talked about in the minutes are uncertainty, trade wars, all of this stuff is similar to what the Federal Reserve was saying yesterday. The Trump tariffs and Trump trade war is going to cause extra pain for a lot of people, and that is slowing down global economies at the moment. It's the uncertainty around it. Imagine you had a business and you manufactured products in America, for example, and you needed timber to do that. Do you buy a load of timber now when you've got 25% rates? Or because of the flip-flopping, do you wait a few weeks and hope that those tariffs then are moved off? It's really hard for business to predict. And what we need to see is a little bit more certainty. If you're going to put the tariffs on, put them on, get the retaliative tariffs from the EU and the UK, and let's just crack on and then we can start moving forward. It's the constant flip-flopping on, off that isn't good for anyone. And that's been talked about by the Fed and the Bank of England today. So they're more cautious is the language that they're using. They're saying they're going to be overly cautious with rate cuts now because we really don't know what to expect going forward. There's a few things that they're worried about. One, as we said, is the Trump tariffs. Are they going to cause a trade war? Is that going to slow down the economy significantly? The expectations are that it could. Next is more close to home. Next week, we've got the spring statement, effectively a budget. And what's going to happen in that? Well, we're expecting that benefits are going to get cut for a lot of people. That's a high expectation at the moment, that is going to be something that hits people on benefits particularly hard. So you'll see that be talked about. But we're also not going to see any tax cuts or anything that's going to stimulate the economy. It's looking like the spring statement is all going to be about shrinking government spending. Now, that's sometimes good, but it also doesn't really get an economy moving. And right now, the GDP in the UK went negative 0.1%, minus 0.1% in January. So if that keeps happening, potentially we could be going towards a recession. So the tariffs and the budget are something that the Bank of England and the Federal Reserve are really keeping an eye on. But what's the vote? That's what we like to talk about here as well. So the vote this month were that 8 wanted to hold and 1 person wanted to cut. Now, that's interesting to know. It means the majority, nearly everybody, wants to hold rates at the moment, with that one outlier that wants to cut. But what was it last month? Well, last month it was the other way round. And so we had 2 people that wanted to hold. And so this is something that we're seeing here is a big change in the stance on the Bank of England. They're just more cautious on what their expectations are. A lot of this is we need to see what happens with the tariffs, what happens with the national insurance increases, what happens with business rates going up, what happens with energy going up. That is something that they've got to really, really keep an eye on. So inflation at the moment is at 3%, and it's expected to, by the end of the year, get to 3.7%. Now, a lot of the stuff that was talked about here was the things that are causing inflation at the moment are energy, bus fares, and the last one is your water bill as well. They've risen significantly for a lot of people. Now, these are really going to hit people on lower income massively. And what's interesting is none of this stuff really is impacted by interest rates. You see, keeping interest rates high at 4.5% at the moment isn't going to stop someone going on a bus, paying their water bill, which they legally have to do. And it's not really going to impact their energy costs as well. They might try and reduce their consumption, but the cost of energy isn't something we can impact. And we call that supply side inflation. So the fact that we're not looking at cutting rates with a slowing economy, with unemployment and uncertainty, to me, doesn't really make logical sense. If we were all going shopping and spending loads of money, then that makes sense. You want to stop us doing that, stop us buying new cars, stop us purchasing lots of stuff at the supermarket and at Curry's PC World and places like that, and online shopping. But this isn't going to do that. And so it is, to me, strange and unnecessarily to keep rates where they are at the moment. What else have we got? So they do see rates coming down still. They talk about that, but it's going to be a much more gradual decline at the moment. We could have 2 rate cuts this year, maximum of 3. So the spring statement, they went into a bit more detail saying they're not expecting tax cuts in that, and potentially we could have what we call a period of stagflation, with the economy going down the toilet, which it's looking like it's going to do, with inflation all the way back up at 3.7% again. They're saying they're not looking to increase interest rates at all this year, which goes against when we did a video about mortgage brokers saying that that potentially was going to happen. But it is not looking great for the speed of getting down. And what normally happens is the Bank of England are too slow to react. We saw that with increasing rates to try and battle inflation. And now I believe we're seeing it on the other side as well. We're seeing a gradual decline rather than actually taking some action and getting the economy going again. They all say, all the economists say, we could be in for a sharp unemployment increase because most companies have hiring freezes at the moment. Most companies are potentially looking at laying off staff because of the rise in the national insurance, the rise in business rates, and all this tariff uncertainty as well. So I think that you're going to see unemployment creeping up. At that stage, the Bank of England might have to jump in by the summer and cut rates. Now, the Federal Reserve did this yesterday. They can't specifically say we're going to cut rates and we see things absolutely going terrible, because then that can be what happens. They can speed and expedite that process up. And so if they're standing from their pulpit saying, look, we're going to see mass unemployment, we're going to see a deep recession, then that, from that place, economists will look at that stuff and talk about that. But if they do, then it really can make some uncertain times in the market. So look, rates have stuck. Are they going to stick in May? Maybe. Like, it's not looking as positive now to cut in May as it was. We're still looking at 2 cuts this year, but it's going to be a gradual, slow process. The biggest thing that we want to happen is to get certainty with these Trump tariffs. If he's going to go ahead with them, great, crack on. But get them implemented on April the 2nd. Give people so they know where they stand, and let's just adapt and move forward from then. If they flip-flop and keep doing that, that's really going to give you some uncertain times in this year. Let me know your thoughts on this. Do you think the Bank of England are going to cut rates again in 2025 or not? Do comment, even if it's just to say hi. Smash the like button. Do subscribe. Let's get it up to 40,000. And check out all the other content on my channel as well, including this video right here.